On January 2, 2026, Beijing stunned the world. China announced strict new controls on silver exports, a move that instantly shook global markets. This wasn't a minor policy tweak, it was a declaration of economic power. Overnight, silver transformed from a commodity into a strategic weapon. Stock exchanges from New York to Tokyo went into turmoil. Why? Because China dominates the silver market for critical industries. Officially, the move was about environmental protection. In reality, it was about leverage. By controlling silver, China now holds a key to the 21st century economy. The message: if you want to build the future, you need Beijing's approval. The policy, quickly dubbed the Silver Storm, sent prices skyrocketing. Companies dependent on silver scrambled to adapt, their business models suddenly in jeopardy. For decades, silver was seen as a hedge or a keepsake. China sees it as the lifeblood of modern technology. Silver is essential for green energy, AI, and advanced military hardware. This move was calculated, a culmination of years of strategic planning. The fallout was immediate. Futures markets went wild, small investors lost big, and industries faced crisis. It's not just about traders, it's about the car you drive, the phone you use, and the solar panels powering your home. All are now caught in a geopolitical crossfire. China's silver controls are a direct challenge to the global order. The world must now respond to a new economic reality. The age of silver as a strategic asset has begun, and the consequences are only starting to unfold. Silver is no longer just gold's understudy. Its unmatched conductivity, reflectivity, and antimicrobial properties have made it indispensable. Today, silver is the backbone of technological progress. The shift was gradual, then sudden. Now, our electrified, data-driven world runs on silver. Every smartphone, laptop, and television relies on it. But it's not just gadgets. Silver is at the heart of the green revolution. Solar panels use silver paste to conduct electricity. More panels mean more demand. China saw this shift early, positioning itself to control the flow of silver like oil in the last century. Controlling silver is now a lever of global power. It's no longer a casual commodity, it's a super metal. The world is only now realizing how critical silver has become. Without it, technological innovation would stall. China's move has exposed just how vulnerable the world is. Silver will define the winners and losers of the 21st century. The stakes have never been higher. Silver demand is exploding from multiple directions. Electric vehicles are packed with silver in batteries, wiring, and sensors. The green energy revolution is really a silver revolution. Solar panels alone could soon consume over half of annual mine production. There are no cheap scalable substitutes for silver in these technologies. Artificial intelligence and data centers require silver for advanced circuitry and heat management. Defense systems, fighter jets, missiles, drones depend on silver for guidance and communications. Add in 5G networks and consumer electronics and the demand is unprecedented. This isn't a temporary spike, it's a new baseline. The world of tomorrow is being built from silver. China's export controls aren't just a trade issue, they threaten the very future we've been promised. The supply chain is under immense pressure. The scramble for silver is just beginning. The stakes are global. China's silver policy follows a proven playbook. In 2010, they squeezed rare earth metals, sending prices soaring and forcing companies to relocate or pay up. The silver storm is déjà vu, only bigger. China now requires strict export licenses tied to national goals and sets variable quotas to reward allies and punish rivals. By refining over half the world's silver, China holds the cards. This isn't about raw ore, it's about processed silver, where China dominates. The strategy: secure domestic supply, drive up global prices, and force foreign companies to move operations to China. It's economic jujitsu, using global dependence as leverage. The world's supply chains now run through Beijing. The gate is closing and the global economic landscape is being reshaped. The message: adapt or be left behind. The immediate impact: a price shock. Silver jumped over 40% in a week, but the real crisis is supply. Just-in-time manufacturing collapsed as shipments from China halted. Assembly lines in the US, Europe, and Asia faced shutdowns, not from lack of demand, but from missing grams of silver. The efficiency mantra of global supply chains has become a critical weakness. A single decision in Beijing can now cripple entire industries. The ripple effect is massive, from refiners to manufacturers to consumers. Solar panel factories, automakers, and electronics firms are all feeling the pain. China's new quotas slash exports by up to 70%, creating a massive deficit. The world already consumes more silver than it mines. Now, the gap is a chasm. Companies are scrambling for new sources, but there are no quick fixes. Building new refineries takes years. The world is paying the price for prioritizing efficiency over security. In this new market, China and its state-owned enterprises are the clear winners. They profit from higher prices and ensure their own industries have first access. Chinese companies gain a massive competitive edge. The losers? Manufacturers in the US, Europe, Japan, and beyond, facing soaring costs and shrinking margins. Many smaller firms may not survive. Scarcity has fueled speculation and fraud. Counterfeit silver, scams, and risky deals abound. Legitimate businesses now face higher costs just to verify their materials. Consumers will pay more for everything from smartphones to solar panels. The green transition will slow as costs rise. The silver storm isn't just economic theory. It's hitting wallets and slowing progress. The future is more expensive and more uncertain. China's silver squeeze is a direct challenge to the US and its allies. Washington condemned the move and took the case to the WTO, but that's a slow process. The US is now racing to build a resilient supply chain with allies, striking deals with Mexico, Peru, and Poland, and incentivizing new mines and refineries. The goal: a parallel supply chain, free from Chinese control. Globalization is splitting into two blocks, one led by China, one by the US. Japan and South Korea quickly aligned with the US, while the EU tries to balance economic ties and security. Developing nations are playing both sides. The world is now divided, and every trade deal is a move in a larger strategic game. The risk of escalation is real. A broader trade war could damage the global economy. The silver storm is just one front in a larger tech war. Every decision is now viewed through the lens of strategic competition. The world is holding its breath. The next move could change everything. The world has entered a new era. Silver is now a strategic asset. The silver storm was a wake-up call, exposing vulnerabilities long ignored. Three trends will define the future: high prices, a global scramble for supply, and ongoing geopolitical rivalry. Prices will stay high. Demand from tech and green energy is relentless. Innovation will focus on using less silver and finding substitutes, but there are no easy answers. Mining will expand in stable countries, and even asteroid mining is on the table. Recycling will become a booming industry. The US-China rivalry will shape supply chains. Companies must choose sides. This division will raise costs but is seen as necessary for security. The future is one of managed trade, strategic alliances, and constant vigilance. The silver storm was just the beginning. The path to a cleaner, high-tech future now runs through a minefield of resource competition. The world must adapt or be left behind.